What's going on, traders? Sandro O'Connell here with Pristine Capital. Welcome to another market recap video. It is December 31st, 2021, aka New Year's Eve. Hope everyone has a nice, happy, safe New Year's. Hope everyone gets to watch the ball drop with people they care about, people they love, their family, their friends. Let's talk about the end of this year. Let's talk about the price action for today. Kind of some choppy action all day, and then we sort of got our river card at the very end of the day. So we'll chat about all that good stuff. Before we do that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account to any one of my trades. Alright, so let's talk about it. So it's New Year's Eve. Today was the final day of the trading year. So another year in the books. We had this crazy 2020, then 2021 was like a follow-up on that craziness. Now we are finally moving on to a new chapter. We had a lot of crazy themes going on in the market. 2020 was like we had the huge crash, then we had these growth stocks that just jumped through the top of the gym and went crazy for a couple months, almost a year. 2021 ended up being just a huge normalization of the market. A lot of those growth stocks came back to reality. A lot of them that were up like 1,000%, suddenly they got cut in half. Suddenly they got cut by 60%. International markets were super weak. A lot of these risk-on areas of the market were also very weak, and it was really just like now that we have all the data in hand, like this chapter of the market is closed. We can really see like 2021 ended up kind of being like this flight to safety. We had the inflation narratives, and due to those inflation narratives and just this pickup in inflation, it was really a story of the Fed having to pivot and potentially tighten monetary policy faster than they thought. So really, like, this market's operating on those assumptions. Like 2022 is going to be a tightening period. And how do we get into position for that? Let's talk about today's action specifically. We have the SPY finishing down 0.25%, NASDAQ QQQ finishing down 0.62%, IWM small caps finished down 0.22%, Dow Jones finished down 0.21%, and the ARK Innovation ETF closed down 2.18%. So let's take a look at that chart. Pretty sure this thing gave back like almost all of yesterday's gains. Closing ranges were not strong today. Pretty much everything closed towards the low end of the day's range. You can see the Dow Jones had the best closing range, but still not good at 22.4% for that range. Volatility, what's interesting, so you might look at this and say like, oh, this is not good. The market closed down. Volatility closed down along with it. So that's actually a positive divergence. And then we had breadth, which was actually positive for the S&P 500, 57% advancers. IWM small caps, take a look at these numbers. The small caps make up most of the market, right? There's about like 2,000 stocks in here. And that only had 48% advancers. So that's negative breadth, but really not that bad. And then you can see we had bad breadth, horrible in the NASDAQ, Dow Jones, and the ARK Innovation ETF. Pretty much every stock was down. There were two that were up. I'm actually going to take a look at those later and see which they were. But yeah, on a day like today, it's the last day of the year. It's also a big options expiration. A lot of dealer gamma rolling off the books. It is pretty tough to create like some divine meaning out of what this was. It's literally the last day of the year. Everyone's just kind of getting set for the following year. Let's take a look at our FinViz heat map. And I would say the story for today was just that we had profit taking in these mega cap tech names. Because as we just went over, we had 57% advancers. Really what that means for the index to be down is that the names that matter the most were trading down. So we had Apple down, Microsoft, Google, Facebook, Amazon, Tesla, all of them trading down. But then you can see some of these other areas of the market, were still positive. So let's dive into those areas that held up. So we had, and take a look at this. I mean, this is noteworthy. So this sector list, every day, I'm ranking this from the most momentum at the top to the least momentum at the bottom of the list. And the story of the day yesterday was some of these areas of the market that had no momentum, got really big bounces. And I made sure, I had some Chinese exposure. I made sure to take profits into the really nice rally. But today we got, some give back in those areas that bounced. In the areas that were strong, check this out. The top of our momentum list right now is consumer staples, real estate, and utilities. Those are areas of the market that investors go into when they really don't want to be in the market. They're expecting bad things in the future. And, probably as part of their mandate, they can't be out of the market. So they go, okay, I'm going to enter these low beta areas of the market, like consumer staples, like real estate, and like utilities. So even though the market's still trading very close to all-time highs, we are heading into this next chapter of the story with very, I don't want to say bearish sentiment, but yeah, investors that are concerned for sure. Let's take a look. Style factors, they show the same thing. High div, low vol was our biggest winner today, followed by defensives. Then our biggest loser, we had growth down 0.5%. We had quality down 0.24%. So yeah, some profit taking basically in those, huge names everyone's hiding out in. Seasonality. So this very end of year seasonality really lived up to the hype of just being very, very choppy. So that's exactly what we got over the past couple days. Now, we're not actually here. Come Monday, we're going to be in a brand new chapter. And the January beginning of year seasonality tends to be pretty strong. But I really think 2022 is going to be such a slugfest because the market's already kind of like wobbling. A lot of these areas of the market are sold off. It's the consumer staples lifting us higher. And look at that. So once you get into January, there's a lot of turbulence, into January, into February, and into March. So I've been talking about this with all of our members, but I really think the investors and the traders that do the best in 2022, it's not going to be those traders that are like, what's the play for today? Like, how do we make money like every single day in this market? Like, I honestly think this is going to be more of a year where it's like you have to pick and choose your spots. It's going to be all about following your trading plans, putting on most of your risk when you have an edge, and really just, maintain your discipline. I know most people don't want to hear that. It's like most people want to just think like, we're all just going to get rich quick in the markets. And I see people all the time, like especially on Twitter, like there's this phenomenon, it's just like part of humanity, honestly, where everyone wants like the 60-second abs or the the get rich quick scheme. The get rich quick scheme, that's the oldest thing in the book. Essentially what people are doing is like a lot of people on social media, they know that most people want to put in no work, no effort, and they want to, get rich quick, basically overnight in the market. So you'll find a lot of people on social media that are really like catering to that desire, that they're selling this vision of a get rich quick, scenario in the market. And I think in 2020, it really validated that because it kind of was like a get rich quick market for the better part of the year. But this is, now we're getting back to like real trading, like what it's actually like, where it's not just like the happy path all the time. See, I think we all have to sort of like reprogram ourselves and be like, all right, this year, like this is going to be my most disciplined year. I'm going to focus on my risk control. And I think if you focus on that risk control, you're going to end up having a nice fruitful year, really no matter what the market does. So that's really the prime focus for me into 2022. And I really just want to instill that, culture into the Pristine Capital trading community. That's really what it's all about. All right, let's take a look. I want to take a look at some of these charts real quick. So let's take a look at the headline indices. Because yeah, if you were watching the market for most of the day, it kind of seemed like a grueling day because the market really did nothing for most of it. And then at the very end, we got a river card. So it's very interesting, like with the human psychology, if the market trades in, let's say like a 10 basis point range throughout the entire day, and you're glued to this screen, your emotions are absorbing every single candle that comes up. Then, let me actually go to the 5-minute chart. You're absorbing all of this data. You're your heart rate's kind of fluctuating with all these candles. Then you get this candle over here that we got at 350. And this, granted, this was like what, like a 0.2% move, but this will feel like a market crash because it's like, your mind is kind of like conditioned. So on these days when the market just kind of chops, I highly recommend, you're obviously doing your homework. You're obviously checking where the momentum is in the market. You're obviously updating your stops. You're still hitting every single, facet of trading, but you don't actually need to like watch the market like tick by tick, because that's where you'll, you can run into issues. S&P 500, you take a look at the end of the day, we got the river card, market sold off, and then after hours, then the market just kind of like popped back up a little bit. And here we are now. So into year end, it's tough to really make all that much of it. But take a look at where we are. We had a really nice bullish 4-day sequence. And here we are, we've had 4 days of consolidation, and now we're back at the 5-day EMA. So there's nothing too, as of right now, nothing too crazy about this price action. If we were to get a pullback to the 10-day EMA, that would be par for the course. Same thing with the 20-day EMA. But this is why in 2022, I highly urge you, if you're watching this video, think about your trading in terms of, weeks, months, and, the year, rather than thinking about it in terms of like, seconds, minutes, and days. Because if you're thinking about it like minute by minute, you might just like blow a stack of money here. The market did nothing and you blew like part of your account. The next day the market does nothing, but you kind of like wanted to play some short-term calls, like boom, you did that again. Here, like you're doing it again. Here you kind of did it again. So then it's like you're just slowly but surely like burning away your mental capital every day. If you really just zoom out a little bit and you're like, market had a big run, it's probably going to consolidate, let me slow my roll a little bit, then you're not as like triggered by like every single little move. And that's something I think we all have to work on in this new market. As take a look at some of these sequences here. Like in some of these sequences, you've really had to be patient for a couple of weeks. Like here, really like 1, 2, 3, 4, 5, 6, 7, 8, 9, I would say 10 days where you really had to be patient. And there's a lot of sequences where, it might be like 2 to 3 weeks where your primary focus is not like, rack up my P&L, rack up my P&L. It's kind of like taking 3 weeks of chilling, and then when you see it come back and the market sets up, then you attack it. So that's really the goal heading into this new year. NASDAQ, it's not the prettiest picture, I'll say that. So the NASDAQ has been consolidating, pulling back, but this actually pulled back into this monthly value area, which you never really want to see. But keep in mind as well, this is going to be our new value area come Monday. And if we get any sort of like bullish flow into the market, we're just going to push right back up above value. So again, it's the end of the year. We're not getting all of our answers, on the last day of the year. Like it just doesn't really ever work like that. And then, so let's talk about this. So like Facebook, for instance, in yesterday's video, I closed out my Facebook. Closed it out for, I think it was like almost like a 50% loss. I had a really nice trade in Alibaba, crushed it. Facebook had a small trade, took it off for a loss. And that's kind of like par for the course. In Facebook, what I realized was, hey, this thing just doesn't want to hold the top of value. And I can tell it's kind of teetering here. And then it lost, it was losing that top of value into the close. So I was like, I'm going to close this out. The reason why I got in, no longer valid. And sure enough, today, this thing is down over 2%. If I had, held those, then it would be like, man, now it's like pretty much at a zero, hurts your mental capital. You really just have to have your thesis, enter. If your thesis is invalidated, then boom, hit out. And then you can move on, then your mental capital frees right up. It's a beautiful thing. Let's take a look at the Russell. Russell has just been a pile of garbage for so long. This thing is like horrible, but it's going to be above the monthly value where it come Monday. So keep an eye out for this thing. You know, it still looks not that great on the weekly chart for sure. And then the Dow Jones pretty much held the top of value. So not much to really talk about here. You can see it's just slightly below. When this new monthly value where it lights up, we're going to be above value. So yeah, headline indices, not all that much information in there. Yeah, and when this new monthly value area for the S&P 500 comes up, we're going to be above that as well. All right, let's take a look at some of my trades for today. And let's pull this up. So the one trade that I attempted today on the long side, so there was this JPM collar trade. And this thing was going to result in, you know, several $1 billion of delta coming into the market. So I said, hey, my only thesis or hunch today is we might get a pop into the end of the year. You know, a lot of times when we go away for holiday, market just kind of lifts up into the end of the year. There's not really anyone around. And we had that catalyst from that trade. So I entered the SPY January 3rd, 476 calls in 2 tranches. Pretty small trade for me here. Again, a little 1-star trade. Really just did it to, you know, I put here trying to participate if we rip higher into New Year's. And the market did not rip higher. So you always get that feeling in the back of your mind of, hey, you know, these don't expire today. You know, I could just hold them into the weekend. You know, we're probably going to get a gap up Monday, right? Like, you know, a lot of times there is a nice gap up Monday. Maybe there's some new money that's going to come into the market, etc. So you always get that feeling, maybe I'll just alter my trade plan. Maybe this one time I'll just not take the stop. But you have to make sure to always take that stop. Even if it's a small trade like this. So yeah, I ended up stopping out, closed it for 93 cents. I had paid $1.95. So again, this is a small trade for me, but another one of my goals for the new year, I would say if I looked at this trade, I did have a catalyst I was trying to trade, so you know, that's good. But I would say this should have been probably a common stock trade, or really just no trade, or something a little bit more conservative. One thing I noticed when I was looking back through my results for this year is that my win rate trading this super short-term stuff is not nearly as good as when I'm trading stock or trading longer-term options, like maybe like a month or 2 or 3 out. So this is actually going to be something from my playbook that I'm pretty much erasing. So yeah, I'm not really interested in trading these like this thing expires in 3 days, 4 days. That stuff, not really all that into it anymore. Just like a minor process improvement into the end of the year, because really what I'm interested in is executing when I really feel like I have an edge. Not trying to take shortcuts of like, let me go for this like 0 DTE option and just try to kill it on like an explosive move. So I really just want to hone in on that. Yeah, good little learning experience. Just final like, hey, I do want to remove that from, you know, really from my arsenal. And the other trade that I did today was, so I actually took off my Airbnb. This right here, closed out my Airbnb for $167.22. I had paid $166.67 for this. So closed out for a very tiny winner, less than 1%. I put here, I don't have much profit cushion in this name. Would rather free the capital up for the new year. That's another thing that you know, I've noticed as well. I entered some of these trades as like, hey, these growth stocks, they're super oversold. I handpicked some of the best companies in the world, and you know, got long these names. And maybe for January effect, you know, maybe they really just spring to life come Monday. Who knows? The first 2 weeks of the year. But Airbnb, for instance, it's a great company, but it just hasn't been able to reclaim the 20-day moving average. And remember, everything that you have on your portfolio, that's open risk. So it's like, hey, for something that can't get above the 20-day moving average, why don't I just pull this in? And then, hey, if it gets back above it, I can always re-add this position. I just want to pull it in a little bit. See, I took that position off for a very small winner. And those are really the only moves that I made today. Didn't really do a whole lot of trading. So let's see real quick. We'll take a look at our options races and just see if we see anything interesting today on the options order flow. Let's see, we got Tesla. Yeah, so very little in the way of options flow for Tesla. Usually this is like 3 or 4 billion of flow, so just goes to show like not really much volume going off today. We had Alibaba. Let's check that out. These Chinese equities pulled in quite a bit. We have some TQQQ going up. Let's check out all these. Let's check out Tradescape. Let's check it out. So we have AMD. I see some flow for March going up, flow for January, and AMD. Let's check that one out. Yeah, and AMD, it's kind of just putting in this like just like tightening price action pattern. And for me, these semiconductors, they were such a major leader in 2021 that I'm not so certain I want to be like lunging after this group now. So like I closed out my Micron the other day, but take a look at this. So if we look at ETFs, where is this? Might not be on here, but let's see. We have the ETFs. I'll just pull up the ETF over here. So if we look at SOX, it was up, 40, almost 44% year to date. This semiconductors rally, it's nothing new. We've been in this semiconductor shortage, so I don't really know how much I want to just like lunge at these now. But anyway, let's take a look. So it was the same thing in 2020. Everyone thought those growth stocks were invincible, and they really weren't. Apple, some nice flow in this one. Coming in for January, we have the 180s, 175s, 170s. Let's see, Apple. And Apple, this is definitely, the strongest FANG name at the moment. And we're still extended from this 20-day moving average, but we're starting to get the little pullback. It's occurring on low volume. Let's see if we can find some of our members are taking a look at NVIDIA today. Mixed bag of calls and puts. Let's see this TQQQ. Some big orders going up for TQQQ. This is the triple leverage NASDAQ ETF. And let's see if we can find that. BABA. Should be on here somewhere. There it is, BABA. Okay, so some big puts going up for Alibaba. These are January 220 puts. It's kind of odd. And we got some January 120 calls. Yeah, these Chinese names. Let's take a look at KWeb. KWeb closed down 1.62%. And let me just double check this. Yeah, this pink line is the 20-day simple moving average. Let's flip this to the 200-day. So yeah, we had an incredible move yesterday, but today we failed at the 20-day moving average. So again, as of right now, this is really just a bounce within a bearish trend. I was able to take some targets in my Alibaba, so that was a good thing. Now it's kind of like a free roll of a trade. Pretty cool. And yeah, this ARK Innovation ETF as well. This thing really just like met its untimely demise today. So look at that. We had a crazy green candle. Pretty much gave, 80% of it back, 70% of it back, and it closed below the 20-day moving average. So yeah, we'll have to see what happens with ARK with these names, because right now it's really just like the staples. And we got the staples killing it. Utilities killing it. So yeah, a lot of these are looking much better. Like Kroger, this is a name that I got long yesterday. This one up 0.27% in a week tape. So this one, yeah, it looks like there was some selling in this one. Closed towards the lower end of the range, but a green candle. And yeah, a lot of these consumer staples companies or consumer defensives, they actually look better than, you know, some of these high-flying tech companies. Yeah, CrowdStrike still down. Yeah, so a lot of these not looking so hot. Let's take a quick look at some of these FANG stocks before we wrap for the year. So Tesla approaching the 50-day moving average, stopping right on it. Netflix in a weak trend here. Yeah, Netflix not really looking so great. Microsoft still right in it. This one, if the market advances higher, this one will likely participate. And then Facebook, we already looked at. I got out of this yesterday. Not really so good. So yeah, we need some new leadership in the market to really emerge in order for the market to keep moving higher. So yeah, this, you know, another year in the books. And again, if you had an awesome 2021, that is fantastic. You know, pat yourself on the back. But now it's pretty much irrelevant. Now we got to focus on the next year. Same thing, you know, if you did horrible in 2021 and you're like, oh, what was me? You know, this is horrible. I'm terrible at trading. You know, that doesn't matter either. It's all about focusing on this next year. So yeah, definitely a pretty ambiguous closeout to the year. It's always good when things just like go out. Everything's on the highs. But yeah, this chapter of the market is just about over. And now it is time to get prepared for 2022. So yeah, I'll be putting out our weekend analysis video. Definitely want to just like take a really high level look at the market. As always, I'll be putting out our weekend watch list as well. If you're interested in signing up for the Pristine Capital trading community, definitely check out our holiday sale that we have running. With that being said, that about does it for this market recap video. Thank you all so much for an awesome 2021. I'm signing off for the year, and I will see you all on Monday.